Good afternoon, everyone. Thank you for joining us. It's the top of the hour here, so let's go ahead and get started. So before we begin here, just kind of want to lay some ground rules here for the course of the next hour here while we're visiting with FranFund. You are attending this webinar today, either on a live basis or on a recorded version because you have interest in possibly wanting to join the Ride-at-Home system by means of purchasing a Ride-at-Home franchise. And in order to do that, sometimes individuals need financing, and FranFund is a great resource for that. So over the course of the next hour, we're going to be talking about some options for those of you who want to join the Ride-at-Home system and some options that you have through FranFund to obtain financing. So I want to make a couple introductions here. My name is Chaney. I'm the Vice President of Franchise Development for Ride-at-Home. And in the event that you inquire about franchising with Ride-at-Home after you watch this glorious webinar, you would be working with either Trevor Steenholdt or Chuck Prentner on the Ride-at-Home team. So Chuck, I'll let you go ahead and introduce yourself first.
Hey, again, thanks everyone for jumping on the call. FranFund, thank you so much for taking the time to be able to talk to candidates looking to start their own business. I am Director of Development. I've been with Ride-at-Home for a number of years. I've been in franchise development. I'm going to date myself since the late 80s. That's 1980s. I love talking to folks about starting their own business, seeing if it's a good match. And it just makes it so much easier when you have a lending partner like FranFund. Just makes it a seamless process.
Thanks, Chuck.
Yeah, my name is Trevor Steenholdt. I do the exact same thing Chuck does. And thank you to everybody that's listening to the recording and listening live, as well as FranFund. I know that I can speak for Chuck on this as well, but one of the questions we frequently get when we're working with our candidates is about financing their business, whether they plan on using cash or an SBA loan or a 401k rollover. And that's why we have really had a great working relationship with FranFund, because they can really provide some great insights and lead a candidate through that process to explore their options. So thank you for doing this for us, FranFund.
Thank you, Trevor. And for those of you that are listening live, there is a feature. If you hover near the bottom of your screen, there's a Q&A button. If you click on that button, you do have the opportunity to ask a question anytime throughout the course of this webinar. I will be on the lookout for the question queue to make sure that those questions are answered as we go. You may also see Michael Losman on your screen there. He is kind of helping us out behind the scenes here with anything that we should need, and also keeping an eye out on that question box. We make sure to get your question answered over the course of the next hour. So without further ado, I'll let you ladies get started.
Awesome. Thank you so much, Jen. And hello, everyone. It's so good to be here and have the opportunity. Guys, we really appreciate the words of support and promotion here when you all were introducing yourselves, and the feeling is mutual. We love working with Ride-at-Home, and really we love supporting aspiring entrepreneurs to achieve their funding goals, to get into business, because let's face it, passion doesn't pay for the business, money does. And we're going to help you understand what your options are to move forward and successfully obtain funding for this new and exciting opportunity. So, today's webinar, like I said, we're focusing on different funding options. And my name is Jessica LaBorde, Jess LaBorde, as I'm known in the industry. And I've actually been part of the franchising world for almost a decade now. I love being able to say that, almost a decade. And I've been with FranFund for about 3.5 years now. Really love working with the team and love working with all the brands that we have the opportunity to. And Mariah, I'll leave it to you to introduce yourself.
Well, thank you, Jess. And yes, thank you, Ride-at-Home team, for those kind words as you introduced us. I'm Mariah Statler, still getting used to saying that last name. I just got married, so it sounds a little bit different coming out of my mouth. But I've also been with FranFund for about 3.5 years and in the franchise industry for about 6. So not a decade just yet, but working my way up there. And yeah, we're just really excited today to talk you guys through some funding strategies, help make sure you're getting into franchise ownership successfully, and just making sure you can start your right at home franchise off with the money needed. Let me work with my slides here. So I do want to give you guys all some information just about FranFund before we get started, who we are and what exactly we do. We have been operating for about 15, 16 years now. And our organization was founded by a veteran in the franchise industry. This individual has had experience in franchise development, sales, operation, franchise ownership. So they had a really good understanding about the needs that folks have when they're putting together funding strategies for their new business. Our company are headquartered in Fort Worth, Texas, right in the heart of Sundance Square, for those that are familiar with the Dallas-Fort Worth area. But we do operate nationally. So no matter where you are in the United States, we can assist you. So figuring out your funding strategy ahead of time, it really is always going to be a pretty solid idea. I mean, think about it. When you guys are shopping for a new car or even a new home, you always want to know ahead of time how much you can afford. And once you determine that, it's really going to make that house or car shopping just a lot more fun and productive on your end. But let's go ahead and get into it. We're going to talk about some various funding solutions available. We'll be talking about some of the different options for new right at home franchisees. So these options may apply to you as well if you're potentially looking at an existing location, but today's focus will be on new locations and new territories. So some ideas that you may or may not be aware of are going to generally fall into these four main categories that are listed here on our screen. The first you can see is going to be equity funding, such as your angel investors or your venture capitalists, where an individual provides you with the capital for business startup in exchange for ownership equity. Then you're going to see asset-backed funding, which includes maybe equipment leasing, if you maybe have a need for equipment there, or if you have non-retirement funds, like a portfolio of securities, you could always do a line of credit against those investments. Another funding option, which is a very common strategy, is going to be debt funding. Now that is going to include borrowing, such as utilizing a credit card. Maybe it's including a home equity line of credit, or you're refinancing your mortgage. Maybe it's a bank loan, including SBA, which is a very popular strategy that we will be getting into more detail on today's presentation. And then the last category here is self-funding. Cash is an obvious answer there, an option. You can always use your own cash savings that you have to fund your business. Or there is another option that some folks may or may not be aware of, and that is an IRS regulated program that allows you to access some of your retirement dollars and invest them directly into a business, tax and penalty free. And that is where we are going to touch on today for our first deep dive here. And I am going to pass it over to Jess so she can kind of run through the ins and outs of that program.
Thank you so much, Mariah. Yes, as Mariah said, there is a really great program internally at FranFund known as the FranPlan. And you may hear it with other names in other places, but really, this is an IRS regulated program called ROBS, R-O-B-S, also known as Rollover for Business Startup. And it's been around since 1974. Allowing folks to access a qualified retirement account associated with a previous employer to invest in your business tax penalty free. So that's pretty amazing. And so everyone is aware, this is not a program that FranFund or any other organization has created to get around the rules and regulations. But what this strategy allows you to do essentially is invest that 401k directly into, and not just 401k, there's a number of qualified accounts that can be utilized, like a 401k, an IRA, 401(b), TSP, the list goes on. And again, you can access those funds to invest directly into the business without having to pay the tax, income taxes or early withdrawal fees. And I'm sure you're wondering, well, how does this work? And it's really pretty interesting. The first thing that we'll do is create a C corporation for your business. That's going to be the business entity, and it's a requirement here for this program to work, to have a C corporation. Now, once that C corporation is in place, and our team will facilitate that, creating your meeting minutes, your stock certificates, everything that goes along with that there. And so what we're going to do next is create a 401k plan that ultimately will be sponsored by the corporation, your new business. And once that's happened, you as the business owner, a W-2 employee of that business, are going to roll the retirement funds from your existing plan right into the new 401k plan that FranFund created for you. And even though you will have the option to put those funds back out in the stock market or into mutual funds out there, what we're really going to do is invest that money not in Apple, not in Amazon or any other alternative, but in your business. So ultimately, the 401k is going to wire transfer those funds into your business banking account in exchange for a purchase of stock in that dollar amount. And you're able to use up to 100% of those funds for any legitimate business expense, from your franchise fee to getting things up and running and off the ground, and even using these funds for working capital, marketing expenses, and in some cases, paying yourself a salary.
Wonderful. Sorry, I'm having some difficulties moving along my slides here. So I'll kind of jump in and let's chat about some benefits of that ROBS program, or the 401k rollover, which you'll probably commonly hear people call it. It's a great program because, one, you're not creating any debt. You're not borrowing from your retirement funds. There are going to be no loan payments to make. There's no interest rates here. And without those monthly payments, you do have that opportunity to cash flow a lot sooner. And because these are retirement funds that you have saved, there's not going to be an application process or approval process that you have to go through. Credit score, not a factor here. They're truly your funds and will be your decision to make. Now, if you're also maybe in a position where you're considering borrowing money, utilizing a small business loan in addition to utilizing your retirement, that combination is very common and definitely acceptable to get you to that total amount that you may need to fund your product. So doing a combination of the ROBS program and an SBA loan, definitely a common strategy that you will see out there. And we'll also touch on that as we talk a little bit about SBA loans. I do want to just real quick kind of go over an example of what it may look like if you just took that money out of your retirement account versus doing the rollover program. In this example, we used about $150,000 in a retirement plan. On the left side, if you do the ROBS program, aka the FranPlan, you get to access that full $150,000 because you're not paying taxes or any penalties there. You get that full 150. While on the right side of the screen, if you do take a distribution from your plan, which is a withdrawal, You could get hit with a 10% penalty if you're under the age of 59 and a half. In this example, we used a 30% tax bracket, but you're going to be hit with taxes. And in this example, it leaves you with only $90,000 left over. That is a big chunk of money when you are working on getting a business up and running. So just some food for thought on, what you could do with those extra funds that you get with doing that rollover program. And it can get you to that point where you need to successfully be running your business. All righty. Jen, I do want to just kind of pause and see if there are any questions before we totally switch gears on products. I feel like now would be a good pausing point to see if there's anything.
Nope, I don't see any questions in the queue here. So just a reminder to those listening, if you have a question anytime, go ahead and type it in there and we'll make sure it's answered. We're all good.
All right. Perfect. Just wanted to double check before I moved programs on everyone. But the next topic that I want to cover is getting you guys up to speed on small business loans and really what that SBA lending environment does look like today. From that structure perspective, the money itself is going to come from traditional banks and lending institutions. So when you do hear folks talk about SBA loans, this does not mean that the federal government is writing loans to start up businesses. The loan is going to be put directly in the name of your business. And then they're going to require you to sign a personal guarantee. What that personal guarantee is going to state is that no matter what happens to the business, it will be your personal responsibility to step in and ensure that those monthly payments are being made on time until that loan is paid in full. Then what will happen is the SBA, so the Small Business Administration, they're going to be signing a second guarantee for the bank. And what that SBA guarantee says is that if we are ever in worst case scenario, and it is impossible for the business to repay the loan, and it's impossible for you as that personal guarantor to make loan payments that you will be committed to, then the SBA, so the Small Business Administration, they're going to step in and relieve the bank of that loan. So with all that being said, the reason why you guys will commonly hear folks mention SBA lending when they talk about small business loans today is because a majority of the banks out there that do fund small businesses are very dependent on that guarantee that they are going to be getting from the federal government. Now, loans themselves, they can go all the way up to $5 million, just depending on the need for the business itself. It is possible now to get non-SBA loan products, such as a conventional loan, but those are primarily going to be for your expansions, or maybe you're opening your third or fourth territory. Now that you have that track record behind you and you have been able to operate multiple territories successfully, then you can see banks a little bit more comfortable with some non-SBA loan options. But for most, SBA tends to be the most appropriate product for a loan. Now, just a little bit chat about FranFund. One of the things that we provide here at FranFund is an SBA Loan Consultative Service. So while FranFund, we are not the actual bank or that direct lending institution, my team, we have a 99% success rate in terms of helping our clients that we have pre-approved obtain these loans so they can get their businesses up and running. We also can give you exposure to our extensive network of the top SBA lenders across the country who are franchise and small business friendly, banks that want to be doing loans for right at home, banks that we've educated, understand, and love the brand. Just a little bit of info on SBA, and Jess, I will let you take it from here.
I've muted. Thanks so much, Mariah. So everyone, there are multiple loan options through the SBA, but when we're talking about an opportunity like Right at Home with a project cost under $150,000, that's going to fit into the wheelhouse of what is called an express loan that Mariah had originally mentioned that can go between really about $100,000 and $150,000 today based on what lenders are interested in. Although traditionally they could go a bit lower. There's just in the environment right now for this type of loan for a service-based business like Right at Home, we want to see that total loan amount range between $100,000 and $150,000 so that we can identify a bank to take it on. Now, regardless of where you pursue a loan from, there are 4 primary qualifiers that any SBA lender is going to want to see that you meet for these types of loans. Now, the first thing that they're going to do is evaluate your credit. They'd like to see a credit score of 680 or higher. They'd like to see that you have not had any recent bankruptcies, short sales, or closures in the past at least 5 to 7 years, if not more beyond that. So just really not recently. And then as it comes to specifically credit card debt, we'd like to see that if you have any balances that carry from month to month, that those are totaling below about $10,000. Now, if you're a little bit above that, don't get worried. Think this is all on a sliding scale and it'll really depend on your full financial picture. But it's important to know that that's the expectation of the lenders. So you may be required to move things around and get that credit card debt down. Now, the next thing that a lender is going to want to see you bring to the table is some skin in the game by way of an equity injection. Now, for an SBA loan of this type, the express loans, equity injection is going to range between about 10 and 15% of the total loan amount. But it's important to think about this as a minimum because as you're going through the loan process and you're closing your loan, the bank is going to provide you with a loan closing checklist. And on this checklist are things like signing your franchise agreement, setting up your business insurance, and a number of other things. If there's any licenses that you're required to have in order to get the business kicked off, that kind of stuff will have to be completed prior to the loan funding. And it's likely or can be likely that the total amount that you'll really need to satisfy that closing checklist may be above that cash injection number. So while your cash injection is going to likely be between $10,000 and $15,000, just know that you may have to submit a bit more funds into the business, invest a bit more funds into the business for that loan ultimately to close. Now, the final really couple of factors that the bank wants to see is that after they've evaluated your credit and after you've injected your skin in the game into the business, that you still have somewhat of a safety net in the event of a worst case scenario. Now, the lender doesn't believe you're going to find yourself here, not at all. But banks are cautious and they really need to protect themselves, or they want to at least. So what they'd like to see is that you can cover what's known as your burn rate. And that speaks to your ability to pay for your new loan payments, lease payments, if there's a lease component, which in many cases for this brand, there won't be. And then also that you can pay for your personal expenses. Now, in a lot of cases for other types of SBA loans, this number is going to be really specific to your certain situation. But with an SBA Express loan, we really want to see at least a minimum, what we call post-close liquidity of about $50,000. So even if your burn rate for you personally, because maybe your personal expenses are low, you don't have a lease payment. And these loan payments aren't super significant when you compare it to other opportunities, that the burn rate may come in lower than the post-close liquidity requirement. So it's important just to know that after you've put your skin in the game, in order for you to be approved, you've got to have a post-close liquid number. So basically cash on hand, a little extra of about $50,000 to satisfy this requirement. And again, this is not money that the lenders believe that you will need to put into the business, but they want to see that you have it.
And for that post-close liquidity, this is a great opportunity to also utilize that Rob's program to help cover that, because maybe not everyone has that 50,000 liquid, but they may have it in an IRA. So this is where we see that combination come into play and why that combination is extremely popular. So you can access that money as your cushion.
Absolutely.
And then Jess, do you want to chat a little bit about our pre-approval process?
I would love to, Mariah, thank you. So regardless of where you pursue your loan, you're always going to start with a pre-approval process. And I always like to say, not to sound cheesy, but every pre-approval letter is not created equally. Like Mariah said in the beginning of our presentation, our team has a 99% success rate in obtaining loans for the folks that we've provided a pre-approval letter to. So that just means that we have an extensive process. We execute a lot of due diligence to ensure that when we provide our clients with a pre-approval letter, that you can be confident, the brand can be confident, and we can be confident that you will successfully obtain your loan. Now, the pre-approval process is kind of the second step in our process after a sort of initial high-level consultation. But in a lot of cases, we're able to provide that pre-approval letter same day as your lending consultation, especially for these types of loans. Now, if there's any concern or question of your ability to qualify, then we'll always take the extra step to pre-shop your deal, your loan, to our lenders to ensure that we do have a positive avenue forward that you can feel comfortable with, and that you can actually get your loan. So regardless of where you move forward with a lending process, I'd say it's really important to understand what's the strength behind the pre-approval. Does it actually mean that you're going to get your loan? And I'll like to share another thing about our process. It's really important to us not just to churn and burn these things out. We want to make sure that while you are provided with a pre-approval letter, or when you are, that you have an understanding as to why. So in that lending consultation, we're going to drill down on each of those qualifiers and help you understand exactly where you stand for your ability to qualify for the loan, so that you can maintain that picture and maintain your ability to move forward successfully. So we provide a lot of value and a lot of insight as we're going through those conversations.
Jess, I have a question for you.
Please.
Do you typically see that, or do you prefer, and there's really no right or wrong answer here. So individuals who contact you, do they say, I've already spoken to Right at Home, I've reached the step where I want to talk financing, or is it more preferred that if somebody contacts you and says, I have not spoken to Right at Home yet, I just kind of want to get an idea of what I'm looking at as far as a pre-approval. So which comes first?
Honestly, it's anywhere in the process, wherever the candidate is, or you as a candidate are comfortable. If you want to know, hey, before I even reach out to Right at Home, am I qualified? Reach out to us. If you reach out to Right at Home, I want to learn a little bit more about the brand before I commit to submitting a pre-qualification. Either avenue is fair. My only suggestion is the sooner the better, whether it's right before they reach out out to you guys or reach out to Right at Home or right after they reach out to you guys. As soon as you know that you are thinking about getting funding, get in contact with our team. Let's make sure we've got a plan and a strategy in place for you so you can really focus on what you're trying to do, which is investigate Right at Home. You want to be focusing on the brand, not the funding part. As much as we love funding, let's focus on the brand and your investigation and get the funding part taken care of ahead of time.
Got it. Okay, thank you.
So just as the slides are a little slow here.
This slide is just kind of reiterating the 99% approval rate that we have at FranFund, our very strong pre-approval process. And this slide always surprises me, just that the national loan approval rate from pre-approval letters is less than 40%. And so that's why I made the comment of every pre-approval letter is not created equally. And some of these pre-approval letters are not even worth the paper that they're printed on. So, it's really important to understand the strength behind the process and behind the company or bank that you're choosing to support you.
So just want to talk about kind of some FranFund steps, which falls into the question, tagging along to the question that we just answered. What are our steps? How can we connect with you? First, let's get that consultation scheduled with one of our funding consultants like Jess. She'll be the person to explore all your options, whether it's an SBA loan or the rollover program. Maybe it's a home equity line of credit or unsecured program. Let's let her help you determine that funding strategy. Work through the one that is going to make the most sense for you and your unique financial situation. Step 3, if we decide, hey, SBA is going to be the right route, let's get pre-approved. Let's do that as soon as possible so we can get a pre-approval letter in your hand. If SBA is not going to be the right route for you and you maybe have decided on fully funding with that rollover program, let's get started. It takes about 3 to 4 weeks to complete, and that way you can have your funds readily available as you are going to sign your franchise agreement. Or we could also start on a program. There wasn't a slide for it, but we call it our safety net program. It is a cost-free, risk-free head start to the rollover, where we will roll your funds into an IRA at the custodian, where we ultimately will create that 401k plan. The rollover from your old custodian to the new custodian, that's typically the longest piece of the process. So if we get those funds in an IRA, it can cut that time in half once you're ready to actually fully start that rollover program. And then step 4, pretty obvious there, which is the ultimate goal, is getting you funded, getting you into business with Right at Home so you can be a successful franchisee. Our goal is to get you guys funded and be in a healthy position to start rocking and rolling with your Right at Home business.
Absolutely. And one more note on our pre-approval process, because a lot of people always want to know, will this affect my credit? And the answer is no, it will not. There is only a soft credit pull at the point of pre-approval. And so you can enter that process without having a concern that it will negatively affect your credit.
No, great thing to point out. People always have that concern. Oh, I don't want my credit pulled. So no, definitely will not have that effect. Now, of course, once we do get the loan package to the bank, they will have to do a hard credit pull, just as any loan, whether it's a home or a car loan, that eventually will take place, but nothing prior to that will happen. So we do want to take some time. I know we covered quite a bit in a short period of time, a lot of information. So I want to make sure we have your guys' questions answered. If you want to get that one-on-one call scheduled, definitely reach out to us so we can specifically walk through your situation, because everyone's is different. But if there's any upfront questions we can get answered, you have us. So utilize our brains and ask away.
Yeah, and I just want to note a couple of things. First of all, ladies, thank you for doing this. I think that you have perfectly captured a lot of the FAQs that we get on the development team here. So this is incredibly helpful to those that are listening on a live basis and on a recorded basis. But as Mariah mentioned earlier, if you're listening, if you have any interest in wanting to join the Right at Home team here, by becoming a franchise owner. I mean, it's no obligation. You can reach out to us just to inquire, just to ask questions. But if you'd like to start with somebody like FranFund to seek more of the pre-approval and get some financing questions out of the way, you can reach out to them first as well. But we would be more than happy to make that introduction to FranFund in the event that you reach out to us as your initial inquiry. So just keep that in mind. Okay. And I'm looking at the question queue here. I don't see any questions. This went by relatively quickly. Sometimes we get a lot of questions, and sometimes I feel like everything is answered during the course of the presentation. So not seeing any questions come in here. So I just want to take this final moment here to thank both you, Mariah and Jess, for doing this today. Incredibly helpful and much appreciated.
Of course.
Absolutely. It's our pleasure.
Yeah. We love supporting Right at Home.
Yes, thanks to those of you who are listening, and we would love to visit with you in person, so don't hesitate to reach out to inquire. Okay?
Awesome. Thank you.
Thanks so much, Jen.
Have a wonderful day. Okay, goodbye.